traders. According to the results of the first week of 2017, the U.S. stock indices slightly rose while the U.S. dollar exchange rate remained almost unchanged. Last Monday, the U.S. stock exchanges did not work due to the New Year celebrations. On Tuesday, the U.S. dollar index updated a 14-year high on the background of the rise of manufacturing PMI. In November, construction spending hit the highest in 10.5 years and amounted to $1.18 trillion. The ISM manufacturing PMI for December was 54.7, which is the highest since December 2014. These positive statistics also contributed to the growth of the U.S. stock indices, which slightly corrected down just before the new year. On Wednesday, the Fed December meeting minutes were released in the U.S. They indicated an increase in inflation risks on the background of the plans of the new U.S. President Donald Trump to reduce the corporate tax burden. The U.S. dollar index dropped while the stock indices continued rising. Additional factors also contributed to such dynamics. China tightened currency requirement for private investors. This resulted in a significant strengthening of the yuan against the U.S. dollar. The sales of General Motors and Ford car manufacturers exceeded the forecast in December, which contributed to the growth of shares of the whole industrial sector. On Thursday, the U.S. dollar index slumped by 1.3%, the biggest daily slump in 4 months. The U.S. stock indices also fell for the first time in 2017. The main reason for this was the very weak data on the U.S. labor market for December, published by the 𝗏𝗡 independent agency. On Friday, the official unemployment data for December were released. In general, they corresponding to the negative report of the 𝗏𝗡 agency. The number of new jobs in non-farm payrolls was significantly below both the forecast and the November reading. The unemployment rate slightly advanced from 9-year low of 4.6% to 4.7%. However, the U.S. dollar index rose together with the U.S. stock prices. Investors decided that the decrease the day before was enough. Besides, the growth of the average hourly wage by 2.9% in annual terms had a positive influence. This is the highest growth since June 2009. This week, few economic data are expected in the U.S. On Thursday, several Fed representatives will speak. On Friday, data on retail sales, business inventories, as well as the University of Michigan Consumer Confidence Index will be released. Happy trading and see you next week.